This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Friday, August 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn up 3 3/4 at 378 3/4. September soybeans were up 7 3/4 at 1015 1/4, and September Chicago wheat was up 3 1/4 at 506 3/4. No export sales announcements here this morning. We will get NOPA Crush out at 11 o'clock Central today. Estimates are right around 191. Official estimate 190.8 million bushels. So we'll take a look at that at 11 and then certainly visit about that in our commentaries here tonight. Guess what we noticed starting the day? Yesterday we filled the gap in July. From July in Nov beans, a little stronger here this morning. And I think really all major headlines this morning pointing to later this afternoon, President Trump and President Putin will be meeting in Alaska. There's a meeting that's scheduled and also with the press and news conference is slated to take place afterwards. So it'll be interesting to see if, the questions and how things evolve there. So everybody will be watching that. Outside markets are stronger here this morning. Dow's up 267. So with that, we'll wrap up the week here, guys. Dustin, what are your thoughts here as we end another week?
Well, I think it's just we had obviously like a crazy report, and the market still seems to be trying to trade that and digest that. It is kind of wild to see corn and corn spreads rising. Not too far from here, we're going to be back above where we were prior to knowing that we had another 2 million acres, and the USDA is writing down a record yield by 9 bushels. So what does that say about the market? Do they not believe the yield? I can get behind the idea, like just talking to a lot of growers in Illinois, that there's a good chance that it's not above last year's record, which was 217. Just canvassing the whole state, certainly going to be areas that are better than they had last year, but there's a lot of areas that probably suffered, especially in the South. I think it's going to be hard to beat 217, let alone get to the 221 that the USDA is writing down. So when you start doing just preliminary ideas of like, well, what if it's only 210? It really kind of depends where Iowa is, where all these other states are. We've had some pretty good, consistent weather. And, that's what happens when we do beat trendline yield. It surprises people when the trend line's already posted at a record. This is not the first time that's happened. We don't know where that's going to end up. I don't want to downplay a north of, north of a trend line yield, north of 181, I think is very possible, very probable right now. Is it 188? I think that number could come down. But even if it's 184, 185, as we talked about yesterday, there's such leeway in the demand at this type of an acreage number that we still can end up well north of a 2-1 carryout, even if you knock that yield down a little bit. So I think the point of it is like, unless something changes on a U.S.-China trade deal, I don't think corn's got, big rebounds coming projected. That's just my personal opinion. And so, how do we hedge around that? That's the question. Now, I will say, years like, where we have a lot of things like good currencies in our favor. We do have the real coming up to new highs this morning again. And it may just be that the global demand is gonna find its price at what it's going to cost us to produce it in the future. So there's a chance that things stabilize and stay a little bit more supported than we think. But that's because it's kind of got to reset to buyers are going to pay the price for new crop corn producers to grow corn. And right now we're so far below that number in the US. And we feel like South America can come and compete with us because they've got just a cheaper cost production. Part of that in the last year, which I still think is recency bias, is they had a 22% drop in their currency. They were able to make those numbers work because they're literally exiting the currency during a strong period, going into a physical asset grain, and then re-entering their currency after it's dropped 20%. It's such a massive move on a percentage. You can't help but stay ahead of a major drop in global prices in dollars when you're dealing in real. So right now the real going up, I think that's one of the best things that we could see for a price increase.
Very good. Justin, what's on your mind as we wrap up the week?
Well, I mean, I think, that's $1 million question, right? Trying to figure out how cheap is cheap. We're going to have a big crop. I think we've been trading that for a while now. The question obviously is how big and how cheap do we get? So, we've got all these, crop insurance. We've talked a lot about it, just how to trade around it. The thing is, if you take the government numbers at face value, right, the market's going to go cheaper, and it's going to, crop insurance alone isn't a big enough force to keep it, in my opinion, from getting to what price it needs to. Now, how do you trade that and the timing and everything? You got 2 months, basically, call it 2 months, because that's the middle of October when you're basically, half set on the crop insurance harvest price. You look at like a long-term chart, right? This is the, call it 2014 through 2020, we traded in a $3 to $4 range, nearby futures. And we're, call it in the middle of that, right? So we're definitely in the cheap zone. How cheap do we get? In that time frame, Brazil has expanded, corn production by, tens of millions of tons. I think actually 50 million tons, somewhere around that range. So the problem is, just global production, basically South America continues to increase. And so I think the question that I have and a lot of people have is how does that all change? How do you prevent them from continuing to expand and being the low cost provider of grains, corn and soybeans specifically? And that's, one of the problems I have with it is, we were in this range for, 6 years. We talked about this, and then we had, a couple pretty big weather problems, and we blew out of that. We had some big trade deals with China. So, we're entering that phase where, we're looking at overproduction again. And until you have a catalyst, I don't know how you get out of that. We'll have rallies. I mean, we'll have rallies. We'll have, we could have a 50 or 60 cent rally from whatever the low is. I just don't know what that low is. Are we going to rally from 330? Are we going to rally from here? I think that's the hard part. So I think you just have to kind of trade around what tools you have on. And I think there's going to be money. It's going to be hard money, right? It's going to be guys that can figure out how to store it, catch a basis carry. There's guys that can catch, 50 cent improvements from harvest to December by storing it, whether that's, putting it in bags and bins. So I think it's going to be, you have to kind of carefully trade this around the tools that you have.
So with that being said, I mean, as you look out forward, you're going to have to see a realignment in costs. You're going to have to see a realignment in rents, the whole deal, because what you're talking about is, I mean, we started this year with essentially, you were always at or close to below cost of production, right? I mean, the whole season. So the grower is going to be like, well, okay, well, what gives? I mean, the fertilizer price is going to break, or
yeah, I feel like we've been talking about it for a year, right? Inflation's kind of sticky, and in the short to medium term, the market does not care what it costs you to produce, because people still produce it, right? Until that stops, until people stop paying high rent, until people stop buying new tractors, until people, cut back on some of that, it's really tough. And when you look at a global picture, if South America, for example, can produce it cheaper and they keep producing it, the one, not to get too in the weeds here, but you kind of hope we get super cheap, because we do have, government payments, like where the U.S. government ends up subsidizing the U.S. grower, and you kind of hold the South American grower underwater.
Mm-hmm.
We haven't seen that, right? So, if let's say we go to $3 corn, for example, and we're still getting PLC for a year or so, at much higher prices, does the South American all of a sudden go into a mini crisis there where they can't afford it? They don't have the same government support programs that we have, for example. Now that does nothing for us right now. I'm just kind of thinking longer term.
Yeah. How you slow them down, basically.
Yeah, that's just been the problem, right? We run into our costs are just higher. So we have these big breaks. We just run into problems sooner than the South Americans. But that being said, we have a much stronger financial system, much stronger government programs than they do. And Dustin's made a great point that if you just look at the currency over time, it's just worked out in their favor. Where they buy inputs, so the currency weakens even further. So the value of their crops has gone up. Now that trend has actually gone the other way. So if that were to reverse, like there's all, it's always a moving target, so we'll hit some point here. I think between now and the end of the year where complete despair, it's never going to be any good. We'll hit that point eventually. Maybe we'll hit it sooner than later, but there are always things that change, right? Every time you get into these, like that's how you make lows, right? Everyone figures out that there's no way we'll ever rally or have good markets again. So, just trying to be level-headed here, and I think it's hard to create a bullish scenario with how things look right now. I think the extra 2 million acres is just, kind of the icing on the cake there for making it really hard to put numbers down that are bullish. You can make numbers that are less bearish, and we stabilize prices here. But to create a bull market from here, I think is tough, unless there's some new factor that comes out.
Yeah, it was interesting to see too. Deere was down. You're talking about machinery and stuff. Deere was down 7% yesterday, just getting hammered on tariffs. They're talking about upwards of $600 million in terms of costs that are getting tacked on, and their forward guidance wasn't that great. So kind of interesting to see it starting to trickle through,
Well, I think you're going to delay purchasing new machinery for sure.
Oh yeah.
Yeah. I mean, it's not a tax liability problem anymore, right? So you're not gonna, but no, I just, I do think you look at the government program, I still think is going to be really important to what that did for overall security of prices. So if rents can come down, if enough farmers start walking away and say, I'm not going to pay this high rent, I have to renegotiate, I think that's probably the biggest expense to cut. And then machinery, things like that, you extend that out, a couple more years than normal. All those kinds of things are going to start happening if they're not already. And then the other thing would be obviously if we can get interest rates down, rates down 1% or 1.5%, that's huge for interest expense for loans. So all those things will happen. It's obviously not a great time right now, but you got to look at the things that we have, and even like new crop corn, we're right around PLC prices already for December 26 corn. So I think just not that that's we'd all rather have higher prices, but at least we have those kind of floors.
I will say, you said something about how to get in the bull market. I think beans do have a chance still, right? Like if the yields, if there's a yield that surprises and it's beans, and we have a 51 yield or 52 yield, like we're pretty tight with that acreage number.
Yeah, I think my opinion, I was talking to another trader about this, but I think the best chance we have is that something does happen with China. No, I think South America's, China's been taking a ton from South America. I think that's the next month or two, maybe coming to an end. They've taken so much. If you did get some deal with them, then all of a sudden you would start looking forward and saying, okay, like we have to realign acres a little bit. I think that'd be friendly. The problem is, I think the biggest question is what's China's overall demand? I'm kind of under the impression that, with the demographics, they might have maxed out on what, that growth that we saw for the last 20 years. I think we're kind of maxing out on that. So that's the one bigger issue I have, is that if you keep increasing South American production, China's always been there to take it. And if they seem like they're kind of capping out, on their total demand, who's the next country area that's going to pick that up? We talked a lot about on the show earlier this summer, I think biodiesel, I think we have to increase domestic demand. We have to find ways to do that, because I don't think there's a country out there right now that you can depend on that's going to take our excess supply. Personally, I think you have to use it. Yeah, I think you have to figure out that stuff. I think you have to rely on ourselves to use it, because it's not just forcing China to buy whatever. If they can't use it, that's just a short-term Band-Aid. It'd be a great Band-Aid to have right now, but I don't think it's long-term.
Very good. Well, we've made it, guys. We made it to the end of another week. This is really interesting. This is a really important segment today, following up on what we went through last week with Jack.
Which we call Jackass, right? It's like a Jackass episode.
Yeah, that's all start of my skit here. Yeah.
Brian, let's see what you got there, buddy.
Yeah, happy Friday, everybody. Yeah, let's address the elephant in the room. I missed last Friday. Jack fills in and completely breaks Friday Fun Fact and turns into Jack's Jackass Friday skit. I will admit it was very funny, but not sure if we even received a fact out of that stunt. That being said, I need to get Friday Fun Fact back on the rails and its laurels of bringing strange and bizarre facts. So I will attempt to show why the human body has problems digesting a gallon of milk in a short period of time. So here goes nothing. I'm going to try to disprove that inflow is not greater than outflow, which will turn into overflow. But I do have a garbage can nearby, so here we go. Here goes nothing. Just kidding. I have no prop comic. I probably end up in the ER. And speaking of ER, maybe that's where Jack ended up last week after his stunt. So let's look at some funny ER visits. We'll start off with the pocket knife hero. A farmer came in with a deep cut. When asked how it happened, he proudly said, "I tried to cut my sandwich in half in my pocket." Oh, our growers are always multitasking at its finest. We'll move on to the kids. One kid who swallowed everything. This toddler ate all 26 magnets off the fridge. When they took the x-ray, the doctor said it looked like it was trying to spell something from the inside. Probably Jack. Continuing on with the kids, the slinky retrieval. This kid swallowed a small metal slinky. Every time he hiccuped, he could hear a faint boing, and the doctor had to leave the room to avoid from laughing anymore. We'll move on to the popcorn kernel. I can see Rylan doing this thing. A teen put a popcorn kernel deep in his ear. When asked why, he wanted to see if it would pop in the sun. The ER room staff made bets on whether he buttered it too. All right, these last three here, I'm going to be turning it up a notch here. The DIY catheter catastrophe. A man thought he could save time by making his own catheter out of aquarium tubing. He ended up needing 3 doctors and a urologist. The ER staff still calls him Fish Tank Frank. And now we'll go to the spicy situation, and all this could have been Jack as far as we know. A man came in with his eyes swollen shut. Turned out he was chopping jalapenos naked, forgot to wash his hands, and, adjusted himself, panicked, and then rubbed his eyes. So he got the double burn. And lastly, the lost remote. The ER staff once found an entire TV remote lodged where the sun doesn't shine. When asked, the patient just shrugged it off and said, "I didn't want to lose the remote." So maybe if I'm off another Friday, maybe Jack can probably pull off one of these stunts for Jackass Jack Friday. So happy Friday, everybody.
Good to have you back, Bri. Good run there, buddy. One thing to note. So Monday, we will have a special guest. Be sure to tune in. It's going to be pretty cool. We've got a gentleman that was part of the USDA lockup during the report last week. Is going to share sort of the methodology, some of the behind the scenes things that go and take place with the lockup, and then also discuss what was discussed about how they gathered the information and came up with the numbers. So it's going to be pretty cool. We're going to be able to ask questions, and it should be pretty insightful. So be sure to tune in there on Monday morning. We appreciate, as always, everybody that supports the show. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports us here. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend, and we look forward to talking to you again on Monday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.